Can hear you.
So, okay. So as I was explaining, we got two types of order block here, and I've given you guys a quick explanation on the concept of this order block, how they form and what it entails, how to look out for these formations here. So explaining the patterns which we've seen on our screen. This first pattern we got here is a rally based rally pattern, is a rally based rally, a bullish order block which the buyers push price, they pushed price. This explains that the buyers pushed price to a specific zone. Yeah, they pushed price to a specific zone and halted for some time. Yeah, loaded up their buy orders because they needed to stack up their orders in order to influence the market move. That's the next buy coming up in the market. So for them to stack up their millions and billions in the market, they we see some formations that indicate the buyers activities at this base area. Yeah, so this base area is basically the point where these buyers load up their orders, is the zone or area where the buyers load up their buy orders, working with this pattern, this bullish order block pattern. So if price, so the buyers pushed price to a zone they found interesting, a zone they think the market move could be influenced from. So on price push getting to that zone, all they did was to come into the market and stack up their orders, stack up their buy orders to instigate another buy move in the market to make price push up again. So after they have successfully pushed price out of this base level, after their orders, like we said, about 10 orders would be loaded up at this base area, but not all of the orders would get filled. But majority of the orders, about 60% to 70% of their orders would get filled and triggered to produce a buy move. So if price can come back to this base level, the whole concept is that after we spotted this formation, we have to wait for price after I spotted this formation and knowing that this is a bullish order block and knowing what happened at this area, understanding the concept of this formation, what we have to do right now, what we have to do next is to wait for price to come back to this base level because we have to mark out the base area. Yeah, we have to mark it out like I just did right now. So what we have to do right now is to come back to the base, is wait for price to come to the base area to get an entry. Yeah, we want to take advantage of this point where the buyers loaded up their buy orders because we understand the concept of this order block. Yeah. So if price can come back to this base level, there's a tendency of seeing price move out of this base level again. There's a tendency of seeing another buy move happen at this on this base area. Regarding to what happened previously, yeah, we have a possibility. There's a high possibility or a high probability of seeing a buy move happen at this base area. So this is where we get into the market. We take advantage of this formation because we know that this is a bullish order block, a rally-based rally. And our interest and focus is to trade with these big traders. We want to trade with them, not against them. We want to take advantage of the areas they buy on because we know that there's a tendency of same price buy from that same area. So we need to know that these spotting out these buy areas where these big traders come into the market, these buy and sell areas, they come with a formation which is these other blocks, and these other blocks have their patterns. So we need to work with the patterns in order to understand the type of move that happened at that area to understand if this is a bullish order block or a bearish order block. And we need to work in hand with the market structure in order to see the effectiveness of this order block. So spotting out a bullish order block, we should know that the market should be in a bullish structure in order to see that order block respected because other blocks fail. Yeah. So we need to increase our chances because trading is all about probability. It's a game of probability. So we need to do things in order to increase our chances of our market prediction. Yeah. So being that you've spotted the market structure firstly, and you've identified that the market is bullish, yeah, you spotted the zones in the market, like the zones and areas where price could possibly react on or react to, then in um um in accordance with the other block formations which could align with these areas which could align with these historical areas or zones in the market. So it increases our chances of seeing price respect these other block formations or see a move happen on our predicted buy zone or sell zone, basically. So we need to work in hand with the market structure. That's why we talked about the market structure firstly, which I'm sure we've understood this market structure and how to spot them out on a chart, which we can spot this other, which this market structure can be spotted on different time frames. The any time frame whatsoever, the 1 hour, daily, weekly, monthly, 4 hour time frame. So this is basically what a bullish order block. So at this point, we have to look out for buy opportunities. We're looking to buying from this base area, and our stop loss will be below what? Below the base area. This is how our entries would be like. Waiting for price to come to the base area, would be buying this index, would be buying this index or any commodity whatsoever. Yeah. So if price comes to this base level, there's a tendency of seeing price move out of this base level regarding to the history or the concept of this order block. Yeah. If it's a bullish order block, you should know that it could either be a rally based rally pattern or a job based rally pattern. So I think we should like write down the name of this. This is what a rally based rally. Yeah. So okay. The rally based rally, as the structure explains, the rally is usually an impulsive move to the base area, and the rally as well is also an impulsive move out of the base area, and the base and these impulsive moves are usually candlesticks of are usually single candlesticks here that moves into this base area, and this base formation, like I explained, they are candlesticks of similar bodies of similar formations. So we need to understand how this formation works. We should be going to a live chart soon. Maybe in our next session, we'll be going to a live chart to spot out these other block formations and see how the base area forms, to see how the rally to the base area is and the rally out of the base area. Remember, this rally are usually impulsive moves. They should be impulsive moves to this base and out of this base. Yeah, so this is what a rally based rally pattern, which you have to wait for price to come back to the base level for another buy move. Yeah, so this is one of the bullish order blocks, and this other one here is also a bullish order block, which is a drop based rally, as the pattern explains, as the structure explains. The drop to the base level and the rally out of the base level. So what this explains is that the buyers left the sellers to push price to the downside. They pushed price to an interesting zone, to a zone they are looking to coming into the market to influence a buy, like to instigate a buy move in the market. Yeah, so they left the sellers to push price to a certain zone. So when price pushed to that area, when price drops to that zone, the buyers came to the market. These big traders, basically, these institutional traders, they came into the market to load up their buy orders. They loaded up about 10 orders, let's assume, because we can't tell the number of orders they loaded up, they stacked up. But let's say they loaded up about 10 orders. And after these orders got filled, not all of the orders would get filled, yeah, but majority of the orders would get filled to produce a buy move out of the base level, which the drop to the base level should also be an impulsive move, and the rally out of the base level should also be an impulsive move to confirm this order block formation. Yeah, so we need these moves to and out of the base level to be and to be impulsive moves. Yeah, so if on the buyers leaving the sellers to push price to the base level, they came to the market and loaded up their buy orders, which majority of their orders got filled to produce a buy move out of the base level, which is a rally out of the base level. So all you have to do right now is to mark out the base area, which we just did. Marking out the base area, you have to wait for price to come back to this same base area to get to see a buy move happen again in the market. Because not all of the orders were filled. So it's expected that price comes back to fill the remaining unfilled orders, to produce another buy move from this same base level. So this is where we take advantage of this formation, trading where the buyers bought from, where the buyers loaded up their buy orders, buying where they bought from, yeah, and selling where they sold from on the bearish order block, yeah. So this is what a bullish order block, a drop based rally pattern. So if price can come back to this base level, there's a tendency and there's a probability of seeing a buy move out of this same base area. Yeah, so this is where we get our entries. Look out for buy opportunities at this point. Look to buying, yeah. our stop loss should be below the base area and our entry would be on the base area. So that's just how it is. Yeah, this is how I get my entries in combination with the market structure. So if this formation happens to align with a historical zone, but it's not like a compulsory thing, but if it happens to be that there's a historical level on the area that this other block formed, then this is 100% a good confirmation. Like we have more confluences to the buys. I don't know if you guys are following up. Yeah, so this is what a drop based rally pattern. A drop based rally pattern. A drop based rally. Okay, what's your question, please? What's your question, bro? Please ask your question, Jeremiah.
Good, sir.
Yeah, greetings.
I wanted to ask about like now, if the price reacts on that other block, like the entry,
Yeah.
what's the confirmation for entry? Entry the market, you understand?
Yeah, confirmations are usually rejections from that base level. We need rejections on a lower time frame because if we have to spot this other block on, let's say, the 15 minutes time frame, because these other block formations can be spotted on any time frame. Yeah. So if you have to spot this other block on the 15 minutes time frame, we actually need an order block.
Okay.
We'll be looking out for an order block on a lower time frame. Sorry, a rejection. Sorry, my bad. A rejection on
Yes, sir.
this base level on a lower time frame, like the 1 minute time frame or the 5 minutes time frame, being that we spotted the pattern on the 15 minutes time frame. So we need to go to a lower time frame to look out for rejections on this base level to confirm our entries. There are candlestick rejections. And another thing as well, depends on how the formation is. Because sometimes price drops inside of this base level before buying. Sometimes you see price.
It
Yeah.
drops down. Yeah.
Yeah, sometimes price
That's
drops
the
inside
reason
of
I
this base
asked.
level before buying.
Yes,
Yeah. So in this case,
yes.
your price drops inside of the base level. The market approaches the base area, maybe in an impulsive form, which we need a good confirmation to confirm that this base level would hold to produce a buy move. Yeah. So what the same thing we have to do right now is to go to a lower time frame. Let's say we spotted this other block pattern on the 1 hour time frame. What you have to do is to go to the next two standard lower time frame to look out for a reversal pattern formation, a bullish reversal basically. Let's say the 5 minutes time frame to look out for an inverted head and shoulders inside of this base area, or a double bottom formation, which is a bullish reversal pattern. I believe you guys know about reversal
Okay.
patterns. Yeah. So you have to go to a lower time frame, the next two standard lower time frame, in cases where price drops inside of this base level, So being that we didn't get any rejection on this base area means that there would be a drop inside of the base area, maybe before we get the buys. Yeah. So if price happens to come inside of the base level, we have to look out for a confirmation, a reversal pattern formation on this base area, which we are to spot on a lower time frame, not on the same time frame we spotted the other block. Not on the same time frame. We have to go to a lower time frame because the market wouldn't present that reversal pattern on that same time frame. Yeah. We could just see like a single candlestick move, a bullish candle out of this base area, which if you had gone to a lower time frame, you would have seen that there was a confirmation, like the market gave a signal to the buys, which could be a reversal pattern formation on a lower time frame or a rejection, basically, maybe series of rejections, but they're usually reversal patterns on price dropping inside of the base level. That's what forms for confirmations on this base area. Yeah. So did that answer your question? That answers your question,
Yes,
right?
sir.
Okay, you're welcome.
Thank you.
So any other question? Do you guys have any question before we proceed? Yeah, so this is what the drop based rally, which we've explained. So these are the two bullish order block patterns we've got: the rally based rally, as the sketch shows, and the drop based rally. Yeah, remember, you have to work with a bullish structure on spotting these formations. We have to work with what a bullish structure. You can't be looking out for bullish order blocks on a bearish market structure, knowing fully well that the market has created series of lower highs and lower lows, and you know that okay, this market is actually selling, and you want to maybe start doing a counter buy, trying to buy in that structure, you definitely burn yourself at the end of the day, because price is likely not to respect any formation or any level or any buy zone in a bearish market structure. So you have to work with what a bullish structure when looking out for other blocks as your entries. Yeah. So that is it for the bullish order blocks. And for the bearish order block, as you can see, the DBD, which is what the drop base drop. As we got a structure here, we see price drop to the base level and the drop out of the base level. So this also explains that the sellers pushed price to a zone, like they push price to the downside to a favorable area where they can load up their buy, like their sell orders. Sorry, they're selling this time. This is for the sellers, yeah, where they can load up their sell orders. So on this base area is is um is understood that not all of the orders on this base area would get triggered, would get filled to produce what a sell move, but majority of the orders would get filled to produce a sell move, which we have to wait for price to come back to this base area for a sell. Yeah. And I think the sell trade I took today on 151S is regards to this other block as well. The same thing. I think we could have a quick look on that index. I was able to catch the sells. So it's still the same concept. Yeah. So a drop based drop, a bearish order block pattern, which the sellers push price to a zone where the big traders came to the market to load up their sell orders to produce a sell move. But not all of the sell orders loaded up on this base area would get filled and triggered to produce a sell move. But the concept is that we have to wait for price to come back to this base area, this same base area. After we spotted this structure, we have to mark out the base area and wait for price to come back to the base area to fill the remaining unfilled orders for a sell move. So at this point, you have to look at for what a sell opportunity, understanding the concept of this bearish order block, and this should be spotted in a bearish market structure. So here we have to look to selling. It's just the opposite of this bullish order block that we explained, right? The opposite of it. Nothing serious. Yeah, that's the opposite of it. So a drop based drop. Yeah, this is my entry model. The drop based drop, a bearish order block. The drop, sorry, the drop base drop. As the structure explains, you can see the arrow direction to the base level and the arrow direction out of the base level. So this is a drop based drop, bearish order block pattern. So the next one is a rally based drop, as the structure explains. The opposite of these, basically, opposite of these, yeah. A rally to the base level, which the sellers left the buyers to push price up to an area they found interesting, an area they think they can influence the market from, an area they think they can come to the market and load up their sell orders to produce a sell move. So on price getting to that area, they came into the market to stack up their sell orders, their billions and millions of dollars to push price to the downside. So not all of their sell orders would get filled to produce a sell move, but majority of their orders would get filled, which would um produce this first sell move out of the base level, which is the drop. We call it the drop, yeah. So after price drops out of the base level, is understood that not all of their orders would get filled, not all of their sell orders would get filled. So majority of their orders that got filled produce a sell move. So the remaining orders, let's say out of 10 orders, like 4 or 3 is left. So there's also a tendency that if price can come back to this base level, we could see a sell move out of this base area. So this is where we take advantage of this formation for a sell move. Yeah, bro. So what's your question? You have to also sell at this on this pattern, and this should be spotted in a bearish market structure. Please ask your question, bro.
Okay, sir. So about lot size, okay, on this VIX, this volatility. Sometimes let's say you open two lot size on a $50 account, and it amazes me sometimes. I'm just confused. Like I'm
On
trying
what?
to understand.
On a $50 account size.
I mean, yes, you open two lot size on a position. Do you understand what I mean?
I didn't get your question, bro. Please rephrase.
I'm talking about risk management.
Yeah.
Yes, you understand. Like sometimes I think you open two lot size on a $50 account.
Okay.
Because he's willing to risk all the money. Risk
Okay.
what
Yes,
he
you
So
can.
understand.
yeah,
Mhm.
I think I got your question. Yeah. So um on that aspect would come to that would be on our risk management class, where I would show you guys how I do my flipping thing, like the way I approach the market when it comes to growing small accounts, trying to flip accounts. Yeah, the mindset and the concept of um of trading, my approach, basically my risk management strategy, because my flipping is all about my risk management. Because you can't flip if you can't manage your risk in a very wise and smart way. Yeah, trading is all about risking, but you need to do things to increase your chances of seeing those risks pay off in a big way. Yeah. So we'd come to that. That's not actually what we have for today, but we'll talk about that definitely in our comment section, in the comment sections. That's on risk management. Yeah, I'll teach you guys my risk management strategy, how I manage my risk, how I come up with flipping accounts without getting stressed emotionally or being scared of blowing the account. I'm comfortable whenever I want to flip account. I'm comfortable risking off the whole account with a mindset and with a risk management strategy and with my experience in play and my knowledge as well, my market approach knowledge in play. So all of this put together comes up with, like, produces those results. So is a step at a time, I believe.
Yeah.
Yeah, so that is it on other blocks. On these other blocks, types of other blocks we've got, like I explained, we've got two types of other block: the bullish order block, which we've got two patterns, the rally based rally, this first sketch here, and I've explained the concept behind this formation, and the drop based rally, which is this as well, which I've also explained the concept behind this formation. And the next pattern we've got is the next order block type we got is the bearish order block, which we got the first pattern here to be the drop based drop, which I've
I have
also
a question.
okay, which I've also explained the concept behind this drop based drop pattern, and the rally based drop, same thing as well. And remember, we should work in hand with the market structure when spotting out these other blocks for our entries. Yeah, please ask your question.
The other block, it must happen at the if it's bullish market in support.
What do you say?
I said it must happen if it's a bullish market on a support zone.
It must not be on a support zone. Yeah, it must not be on a support zone. It must not be on any zone. Other blocks
Okay.
are they are sustainable on their own. Yeah, but if
Okay.
it happens to be that there's a zone on which the other block was formed, then
Okay.
that
Just for
is
you to make sure you follow the market structure.
exactly, just follow the market structure.
Okay.
But if it happens to be that there's a zone
Don't there.
on the
It makes it
area where the
more
other block formed, then is a good confirmation. Is an additional confluence to your buy reasons, to why the market is to buy from your predicted buy zone. But just make sure you're working with the market structure when spotting these formations.
okay. Yeah.
Yeah. So any other question?
Okay, I don't know if time permits us. Can we take a look at it on the live chat?
Honestly, even if it's one.
Okay, these formations, right?
This
Yes.
one, yes, yes.
Okay. Let me just quickly go to the index I took today, the sell trade I took on 151S.
Yes, the last trade.
Yeah, so this is what this this is a bearish order block I spotted here. Very neat, so clean. This is a drop base drop. You can see the drop to the base level, an impulsive approach to the base level. And like I said, the base formation are usually candlesticks of similar bodies and similar formations. And we can see right here that these candlesticks are of similar bodies and formations. Yeah, they should cluster together. That's how this base level forms. And they should be from like could be 2 candles, could be 3, 4, but let's not be more than 5 candles basically. Could be 2, 3, 4, 5 in some cases, yeah, but 3 perfect, 4 perfect, yeah. 2 good as well. So you can see how this formation is the drop to the base level and the drop out of the base level, and this is what a bearish order block formation. So the market structure comes in on seeing this. This was a bullish structure previously, which we can see. Let's just we don't need to start spotting the whole structure, but we can see that this is what a high. Sorry, this is a high, a low. This is a higher high because we had previous highs and lows. So this is a higher high, higher low, and higher high, higher low. So here, price created an equal high instead of a higher high, right? So you had an equal high formation here. Your price drops to downside, created another high, a lower high as we can see at that point. Then price dropped down to create a lower low, which there was a break of structure at this point. And at this point, at this area, we had this other block formation, which is a drop-based drop pattern, a drop-based drop bearish other block pattern. So all I did was to wait for price after spotting the structure and like, having my expectations on this index. All I did was wait for price to come back to this base level to short this index. And I think my targets were here on the sells. These are my targets on the sells, which is a very good risk to reward. My stop loss was above these highs. You can see how nice price dropped. So the concept explains that not all of these orders, not all of the orders filled here would get triggered to produce a sell move, but majority would get triggered. So you can see the first sell out of this zone was this, which there was an expectation of price coming back to this base level to short this index. So as simple as it is, you short. Stop loss should be above the base level. And I'm sure this was a good sell trade caught on this index. Yeah, and I think overall this index is bearish. Not only this structure I spotted, overall market is bearish. We can see on the 1 hour time frame series of lower highs, having a high there, a low, lower high, lower low, lower high. I think lower low. This was a fake out break of structure there. We had a lower low formed here. So market is bearish in general. So we had sell possibilities in addition to the structure and this previous structure that got broken. So I think this is a nice sell trade. And coming to our level, there's also a level that aligns with our order block area, which is this. You can see this reaction here, these buys, the sells, these reactions at this point. So for this order block to form here, there's definitely a sell tendency, a sell probability for on this index. And you can see how price drops. And we could still see more sells on the look of things. Yeah. So, but catching the sells to these lows definitely a good sell trade on this index. So I believe this is clear enough.
Okay.
Is this clear enough, guys?
Yes, it's clear enough.
Okay. I believe we all understood what we learned today. In our next session, would spot out these other blocks properly on a live chart and see these formations, get conversant with these formations. So I don't expect you guys to like understand the whole concept at once. It takes time to understand other blocks, yeah, to understand the whole concept, to digest the order block information to get conversant to these formations, because you need series of backtesting to get used to these formations. Because sometimes during my early times of learning order blocks and understanding how they work, I made a lot of mistakes by spotting formations that are not order blocks, which is normal. So it takes you to build on your experience and practice. That's the only way you have to do to get good at whatever you are doing. Yeah, Fibonacci as well. Good. I use Fibonacci in some cases for an extra confirmation, which we'll talk about on next session as well. I think I can have a rough talk on Fibonacci. But I think I did a video on Fibonacci on my YouTube. So, but that's by the way, Fibonacci and for an extra confirmation, that's for sure. Especially when the market is trending. Yeah, when the market is trending, you can bring up Fibonacci for an extra confirmation. So this being the swing highs, the recent swing high and the recent swing low here, just select it, match it up. It's 1.8 fib level, a good confirmation. Down this confirmed, like I had a lot of confirmation on these cells because I also used the Fibonacci to confirm this cell area, and yeah, price dropped good, which is a good catch. So I believe you are good. So do you guys have any question so far?
No, not at the moment.
Okay. What do you say? Hello.
So, not a lot about just catch.
Oh, it's breaking. It's breaking. It's breaking. I can't hear you clearly. I can't hear you. Hello, are you there?
Again, I'm here.
Look, I can hear you now. Please, what are you saying?
We need a lot of backtesting so that we're able to master it.
Yes, exactly. Like you need to backtext and get conversant to these formations. It takes practice to be good at something. So you just need to practice, backtest these formations, spot them. Just take it as an assignment to after our next session, I'll give you guys an assignment to spot other blocks, basically, to spot out other blocks on a chart. So I think that would be a start to working on these. Yeah. So in our next session, we'll spot out these formations on the live chart, which I just gave you guys a hint on the trade we took today. This sell trade, working with the bearish order block as well. Order block was spotted on the 1 hour time frame, which you can see how good price dropped to the downside, how price sold good in accordance to market structure. So I think it's all clear at this point. So thank you guys for your time and see you in our next session. Do have a good evening. The class is being recorded, so I'll send you the video.
Thank you.
You guys can
Thank
see
you very
that.
much.
You're welcome. You guys can go through the
Appreciate
video on Twitter for a
Thank you.
revision on the session we had. Yeah, thank you guys. Thank you everyone for your time and do have a good evening, a good night.
Thank you, sir.
Welcome.